have heard your requests and we're delivering.
Hold on to your seats. These are the top areas under 650,000 in
Every state in Australia.
We're going to be starting with Adelaide, South Australia, working around the country clockwise.
Get ready to watch some of the top locations in Australia for 2025 that are still affordable. Joining me for this cross-country analysis is none other than InvestorKit's lead research analyst, Junge Ma. She's going to be doing a deep dive into the data to rank each area on our leaderboard, giving you a clearer picture for longer-term capital growth on a budget.
Adelaide is growing fast. If we look at the last 3 months rolling median, it's already for Perth. The economy is diversified, yet the mining industry is providing around 17% of job opportunities.
Looking at the what, where, and why for each area to determine which one comes out on top.
Bunbury,
Okay, what are we buying there?
a house.
The why is really around the fact that there's some decent pressure in the market still.
Right.
Leaving no stone unturned for every state and territory around Australia.
Getting back to the question of what would you need to see,
The most important indicator I would like to see is
there must be like an area that is like more of a standout.
among all the 8 regions I picked.
If you've been thinking you're priced out of the market or just want to understand each state from a detailed data analytics point of view, you're going to enjoy this episode. My name's Todd Sloan. This is the Pizza and Property Podcast. This episode's powered by Suburbs Finder, InvestorKit, and Inside2. More about our show sponsors in the links below. But right now, let's get into our chat and start flying around the country with lead research analyst, Junge Ma.
Junge Ma, how are you?
Good. How are you?
Very good. I think there's going to be a lot of comments underneath this episode because I know there's been a lot of requests to actually make it happen. 650,000, it doesn't get you as much as it used to, but it can still get you into some pretty good markets. Every state has got a pretty big difference about it though. Hence why I think a lot of people are wanting your opinion specifically on what $650,000 or less, because I'm pretty sure you got someone on the list with a 5 in front of them.
Right.
You do? Excellent. What it can get you. But not only that, what are you buying, where are you buying it, and why are you buying it? Before we jump in, and I think we're going to be starting with Adelaide, South Australia, working around the country clockwise. Is there anything you wanted to kind of set the stage with this one?
Okay, cool. As we have this budget for different states, we may pick different types of markets. They may not all be hotspots now, but yeah, I'm doing my best to to pick the markets that suits the budget, and among all the markets in that state is doing relatively well.
Well, and I guess you can't pick a hotspot in every single state because that presumes that
many
the entire
states are
country.
not really.
Exactly. Yeah. Otherwise, the entire country would be booming in unison, which, whilst we've seen that in recent history, that's not a normal event. Got it. Okay. All right, cool. I'm really looking forward to seeing what you got here, Jong. So why don't we start with South Australia and kick it off with what are you buying?
For South Australia, I would love to buy a house.
Yep.
And in terms of where, staying in Adelaide.
Okay, so we're not going to any of the regions?
No, the reason is, although the regions are actually affordable, at this moment we are seeing market pressure relief in many regional areas. So I guess for safety, for higher market pressure, I would still stay in Adelaide.
Okay, and whereabouts in Adelaide specifically?
Yeah, an affordable area to the north, Playford.
Right, all right. So we're going out north. Okay, so we're buying a house out north in Adelaide and under 650. I'm pretty sure you're still getting something decent under 650 as well?
Yes, because in the SA3 of Playford, the median price now is 530,000.
530, okay.
Yeah, I have to say this 530, it is a 12-month rolling median.
Gotcha.
Adelaide is growing fast, so if we look at the last 3 months rolling median, it's already 570,000.
Wait a second. So 530 over 12 months, but then rolling over 3 months, it's 570.
Right. If we pick the median price over all the transactions in the last 3 months, it will be 570.
I get what you're saying. I just didn't realize the growth had been that rapid over 3 months out there.
You mean compared to the past year, right? I mean, not.
Well, no, I mean, if the 3 month median price is 570, doesn't that mean that a lot more of the growth has happened over the last quarter rather than the last year? Or am I interpreting that wrong?
No, I think it's more, I mean, a lot of growth happening in the whole year.
The whole year,
Yeah.
right. Okay. So your 530 is averaged out over the year, your 570 over the 3 months. So you're basically looking at this going, as much as it says technically it's 530, realistically people might be expecting to spend a bit more than that.
Yeah, if you're looking to buy something over median price, you might be looking at around 570.
Gotcha. So still well under the 650 though.
Right.
All right. And is there any areas in particular in Playford that you're looking at, or is it just like Playford as a whole?
Yeah, for this episode, Playford as a whole.
Yeah. Okay. All right. So Playford as a whole. And why? So we've got the what, we've got the where.
Yes. The why is that we are seeing market pressure still trending well there. I'll give you some data points. So inventory trend first. Inventory level now is 1.9 months of stock,
Okay.
well under 3 to 4 band. And it is down from 3.4 the same time last year. So it's been trending downward.
Right. Okay. So pressure's on.
Yes, gaining some pressure. Days on market as well. It is now 61 days. Not extremely low, but it is declining.
All right. I know you're saying Playford. I'm putting you on the spot, but there must be like an area, something that is like a bit more of a standout. Either like a this is really the one, or maybe like, oh no, this is the one to stay away from. What do you reckon? You got 650.
Yeah, within Playford, I guess Craigmore would be something I'm comfortable with.
Okay, Craigmore.
Yes, it's a bit more expensive than the Playford median. It's now 590k, still well below 650.
Yeah, 590. Okay.
Yeah, and it's a well-established area. Rental percentage is just above 30%, so it's
Right.
quite healthy.
And comparing that with some of the others, some are as high as like 60%, aren't they?
Yes, I just saw Elizabeth South.
Yep.
The rental percentage was 63%.
Well, not only that, but you get more Craig in Craigmore as well. And it's better than going out north in Melbourne. He's on fire out there at Craigie Burn. Anyway, I should stop talking. All right, so 650,000 spent in South Australia. Basically, you're looking at the what is a house.
The house, yeah.
The where is Playford. And more specifically, Craigmore is something that you're looking at like, okay, this could be a pretty decent spot for it. And the why. The why is really around the fact that there's some decent pressure in the market still. There's some good affordability, and rental yields, was that the other factor, is still pretty decent?
The rental yield compared to Adelaide, it's still good.
Yep.
Playford itself, and then the SA3, it's 5.3%.
5.3.
It's better than Adelaide's average.
So 5.3% as like an average or a median yield. And so if someone's willing to roll up their sleeves, maybe add a little bit of value, there's actually still potential to maybe you can get like a 6%. Like it's swinging for the fence, but it's potentially there. Right. Okay. Love it. Is there anything else that you wanted to talk about for South Australia under 650?
I would like to mention the growth cycle a bit.
Yeah. Okay.
As we know, Adelaide is now a hotspot. It might have passed the peak a bit. So moving forward, it might achieve the high growth it has achieved in the past 2 or 3 years. Good amount of growth ahead.
Yep.
And I'm now buying it here, not because it has a lot to grow in the coming 3-5 years.
Got you.
It's more for the long hold.
Right. Okay. So you're looking at this as like a decent investment over the next 10 years. Is that more what you're saying?
Right.
Gotcha.
Or even longer.
Even longer potentially. Okay, cool. So you're not expecting this to double anytime soon?
At this moment, not really.
No, gotcha. So as far as Adelaide on the leaderboard, now I know we're not talking about Adelaide as a whole, like we're talking more so about specifically for this what, where, why, 650 or under, where is it sitting?
Among all the 8 regions I picked today, I would like to put it in the 7th, not 7th.
7? Oh,
Third.
that's doing bad.
The 3rd place.
3rd place.
Yeah.
All right, so Adelaide's got a bronze medal. Not bad. Okay. All right, so 3rd place for Adelaide. Now, what do you say we jump in our little cartoon plane and head on over clockwise to Perth?
Sounds good. Sounds good.
All right, tell me about Perth. What, where, why? Jung?
Okay. When you talk about Perth, are you talking about WA or Perth?
Well, actually, no, you're right. I say Perth and I shouldn't. I should say WA, because if there's somewhere that you've got outside of Perth, there's maybe a regional spot that you're looking at that's like, this is WA, but it's nowhere near Perth.
Right.
Well, then that could be on the list. So am I wrong? Is it completely out of Perth?
Yeah, this time I actually picked something out of Perth.
Interesting. Where are we going?
Bunbury.
Bunbury. Okay.
Not too far from Perth.
All right. And what are we buying there?
A house.
A house? Okay,
Yeah.
so the what is a house? All right, and when you say Bunbury, are we talking like Bunbury as a whole, or is there somewhere specific in Bunbury that you're looking?
I would say anywhere is well established, not with too many new developments happening.
Gotcha. Tell me a little bit more about Bunbury. What's the size, population, that kind of stuff?
So Bunbury, it is, I think, the second largest urban area in WA.
Right.
Population is somewhere around 80,000.
Gotcha. Okay, so it's a smaller regional centre, but it's not like a tiny little town.
No, yeah, it's if you think about it, second largest city,
Yeah.
like Mount Gambier to South Australia.
Gotcha. All right. And so what kind of a price are we looking at in Bunbury?
So Bunbury's median house price now is 530,000.
530. Okay.
And again, I'll have to say this: that is 12-month rolling median, meaning with the high growth over the past year. If we look at shorter-term rolling median, for example, the 3-month rolling median, it is now already 585.
585.
It's has grown a lot.
So, but we're still well under the 650.
That's true.
Okay. And yield-wise, is it easier to hold out at Bunbury? Because I'd imagine it's got a decent yield.
Yeah, yield is still good, 5.6%.
5.6. Okay, so even more solid than Playford.
Yeah, WA is still good.
Yeah.
And it's been stable. It's not that price is going too fast and yield is going down. At least over the past year, rents have grown very well as well, 16% in a year.
16%.
So yeah, that high rental growth has make their rental yields quite stable.
So for anyone that looks at Perth and basically, or WA maybe as a whole, and says mining reliant, there's a whole bunch of uncertainty around that now. And like Perth in itself obviously has a much more diverse economy, just simply being like such a big city. If we're then going down to somewhere that's obviously still a larger regional centre, but far smaller than Perth, does that mean that there is more of a risk to be managed then about if mining as a sector starts to really take a hit, that these smaller WA towns are going to feel that even more because maybe their economy isn't quite as diverse? Does that kind of come into play there?
That's a good question. To be honest, Bunbury is not reliant on mining as much as we think.
Okay.
So for Perth, the economy is diversified, yet the mining industry is providing around 17%, 17% of all job opportunities.
Okay.
But in Bunbury, we are looking at 1.7%. It's 10th.
So it's basically not even there. Like it's yeah, okay.
Yeah.
So as far as the reliance is concerned, Perth is far more reliant economically than Bunbury is.
Yeah, we can say that.
Gotcha. Okay. But even 17%, that's even lower than what I thought anyway for Perth. Like I know that's still pretty high, but I actually thought it was
I guess
higher.
the economy has diversified.
Yeah. Okay. All right. So as far as it being a higher risk, not really there. So we know where we're buying a house. We know where we're buying in Bunbury. As far as the why is concerned, why are you going to Bunbury? Why not Perth?
One is because of its affordability. With this budget, I guess I'm more comfortable choosing a house in Bunbury. And another reason is in Perth, it's not happening in every region, a sub-region or suburb, but we are seeing some increase in supply in Perth.
Okay.
But in Bunbury, it's not happening. Inventory here is still trending down, and number of listings is still trending down. So seeing that, I am more comfortable buying here.
So for Bunbury, it's nowhere near as reliant on mining as some people might think. And also, you're looking at this instead of Perth because it's got more of like an affordability factor to it because Perth's already seen so much growth. Has Bunbury kind of grown in line with it? Or is like Perth has grown heaps more and then Bunbury started catching up? Like where are they kind of sitting that way?
Bunbury's growth is actually a bit better than Perth.
Better?
It is, yeah. For example, if we look at last 10-year annualized growth, Perth is now 2.6%, but Bunbury is 3.7% already.
They're still so low.
Yeah, so the recovery is faster than Perth, but still low, still catching up.
So, and is this one of the reasons why there's so many people now saying like, nah, Perth's done, get out, it's all over. But you're looking at that going, no, it's not. Like there's
still has room to grow.
Yeah. Okay. All right. And which is bringing us now to as far as the scoreboard's concerned. Whereabouts is, I was going to say Perth, but whereabouts is WA and Bunbury sitting on the scoreboard?
Based on the high market pressure and the good rental yield and everything, I would love to put it at the top.
Number one.
Yes.
There we go. Okay, so Bunbury's your number one pick for under 650. Okay. All right. I feel like we maybe should have gone anti-clockwise then. We've revealed the best first, or almost first up. But why don't we jump in and actually get to our next place? Where's next on the list? We're looking at Darwin.
Yes, let's go to Darwin.
Okay, so Darwin, 650,000. What do we start with? What are you buying?
For Darwin, it's okay to buy a house there, I believe. So yeah, I'm buying a freestanding house.
Can I just stop asking that question? Is it houses everywhere, or is there a bit of variation coming?
Towards the end, we may have something different.
Okay,
but,
all right. I'll keep asking then. All right, it's about houses for Darwin. As far as the whereabouts are you going in Darwin?
Yeah, I was looking at this SA3 called Palmerston.
Palmerston. Okay, and why Palmerston?
Again, because of its market pressure combined with the price point. If we look at places closer to the Darwin city centre, they're still more than 650. So to be more comfortable, I would choose somewhere a bit far from city centre. Palmerston it is.
I haven't got to where this is on the list, but I'm going to take a guess that it's not at the top. It's not number 2 next to Perth. But what I'm kind of curious about is, and correct me if I'm wrong, because if I am like this, I'm going to look like an idiot in a second, but what would need to change for Darwin, for you as a data analyst to go, yeah, things are looking good? Like, can you kind of pull apart a little bit of what's happening there currently and what you'd need to see different?
Let's go through data points first. Days on market now is 146 days.
146 days.
Yeah.
That's a lot of days.
It's not a hot market.
Wow. Okay.
And the good news is it's stabilized and is showing a downward trend. So it's tightening up. It's tightening up.
Okay.
Vendor discount is 6% now, not bad. And it is declining, 8% lower than last year.
All right, so vendor discounting 6%. And for anyone that's a little bit newer at investing as well, thinking what's vendor discounting? Simple terms, if a property is listed at $100,000, if 6% was the vendor discount, then that means it would sell at $94,000, just for like quick and dirty sort of numbers on that one. So the more vendors are discounting, typically it means the less pressure there is in the market. So a 6% vendor discount, it's not exactly showing signs of amazing growth, is it?
Not really, but if we look at the trend, it's still okay. It's declining. Okay,
so that is going down.
Yes.
All right. And what about the rental side of things? What are vacancy rates looking like?
Vacancy rate is low, actually, 0.57%. And it's declining. 21% lower than...
That's really low, 0.57.
Right.
Right.
Yeah, very limited rental supply.
What's going on there?
I guess after 10 years of stagnancy, there are not many investors there. That could be why rents are going up so quickly. Yield is so high now.
Talk to me about rents going up so quickly. Like how quickly is quickly?
Last 1 year, 8%.
8%.
Not extremely crazy, but I believe the year before it should be faster than that, because I remember seeing news all over talking about Darwin's rental affordability.
Okay, 146 days of market, 6% VD or vendor discounting. Vacancy rate is 0.57%, so incredibly low. You're talking about an 8% increase over the past 12 months in average rental prices. And is this just for Palmerston, or are we talking Darwin as a whole, these numbers?
Just Palmerston.
Just Palmerston. Okay, so just Palmerston. So as far as the growth's concerned, I've got a feeling looking at the vendor discounting days on market, you're about to tell me some pretty slow growth figures.
Right. 1 year growth, just 1.9%.
1.9.
And I believe most of the growth happened over the past 3 months, which was also 1.9%.
Now, Darwin did boom a long time ago, didn't it? Wasn't it like 06, 07 it was the place to be?
I think over the mining boom at the time. And I think it became the second most expensive city just after Sydney.
That's right.
For some time.
Yeah, I remember that. So getting back to the question of what would you need to see, I'm assuming the answer to that is not 146 average days on market.
Yeah.
Vendor discounting to go to like 1%, 0 or even minus.
If we are looking at this vendor discount data we get from Domain Insight, it never goes down to 1-2%.
Okay.
Yeah, the lowest would be 4-5%. The most important indicator I would like to see is days on market constantly fast declining. Yes, not it stays this high and just moving downward slowly, I don't think big shift would happen.
Yeah, gotcha. And is there any more that you'd like to cover on the why for Palmerston?
One more thing I wanted to mention is the long-term growth, but it's actually more for Darwin or Northern Territory in general. Last 10-year growth was extremely low. It was only averaged at 1.4% per year. So I guess there is plenty of room for Darwin or Palmerston to catch up in the future.
So once days on market start falling, we start seeing some of these indicators going in the right way. As far as the value play is concerned, a strong yield's concerned, there's some upside to Darwin.
Right.
But it sounds like that's a big when game.
I think so. We have to be patient.
Yeah. Okay. All right. So where are we sitting on the leaderboard?
Because of its slow recovery, overall Northern Territory's higher reliance on the mining industry, I will have to put this one at the 7th place. 7th.
All right. Sorry, Darwin. So we're not doing too well. So 7th place. Hold on, now there is 8, isn't there, in Australia? Yes, 8. So second to last. I had to quickly check that. All right, so second to last. I would ask you to explain, but I feel like you just have. Like, this isn't exactly a shock.
Right. Yeah, I guess the most important thing on my mind was the economy, not too healthy, and the city itself. It's not attractive enough to keep people stay.
It's quite transient, isn't it?
Yeah, I guess it's more for, people go there more for jobs and perhaps immigration opportunities. But not many people are going just in the sake of Darwin itself.
Now that you say that, I've got a few friends that years ago, they moved up there for a year, 2 years, did some work, came back. I've actually got my assistant has actually just moved there as well. She's migrated there to Australia, helped her out with that. So yeah, I see what you mean. Okay. All right. Well, should we jump in the plane and where are we off to next in Queensland?
Yes, the Sunshine Coast.
Sunshine?
No, Sunshine Coast, Sunshine State.
Sunshine State. Okay. And whereabouts in the Sunshine State are we going?
We are going to the north.
To the north?
Townsville.
Townsville? Of course, Townsville. All right. So what are we looking at in Townsville?
Townsville.
It's a house?
For this price point, we can still buy a house.
Okay. So when you say, for this price point, we can still get a house. And where are we buying it in Townsville?
Yeah, plenty of options. Same as Bunbury. It's a well-established area. Yeah, not too many developments going on. And not flood impacted. Yeah, that would be all good to go.
On that, because whenever we talk Townsville, there's almost guaranteed to be a comment in basically saying Townsville floods, this is a terrible idea. You got any quick tips for anyone on the best way to find a free flood map on Townsville?
I believe their council, Townsville Council or any Queensland council, they have interactive mapping portals. I guess just Google Townsville interactive mapping and you see that website. And they have different layers of information. that includes flooding and all the planning restrictions.
Perfect. And the reason I just wanted to highlight that is because whenever I see that comment, there is absolutely validity to that. But don't let it scare you from actually potentially investing in a place where you could be more than high and dry and in a very safe place for it. You just want to make sure that you've got your thinking cap on and that you're actually investing outside of a flood zone. Mm-hmm. Don't just write off an entire town because parts of it get flood affected.
Right.
Cool. All right. So the where and why Townsville?
Why Townsville? Affordability is the first thing. Mm-hmm. Then the healthy rental yield.
What's the yield?
Easy to hold. The yield now is still above 5%. Let me have a look. 5.8%.
5.8%.
Yeah.
Okay.
But yeah, when we talk about it, it looks really high. But if we count the
Council
higher
rates.
Yeah, the council rate, that's high. Property management fee, I think it's higher than the southern states as well. Mm-hmm. And then the higher insurance premium. Mm-hmm. I guess if we cut all those out, the net yield won't be this high. It could be just 4 point something.
So when you look at it as a gross rental return, great. But like you just said, net rental yield, there's a few more expenses.
Just average.
Yeah. Okay, that makes sense. Right, and what are we looking at price-wise in Townsville?
Right, in Townsville, median house price now is for 90K.
Still, I thought it would have surpassed that.
Again, that's last 12 months median.
Yeah, okay.
If we look at shorter term, it's already above 530,000 now.
I feel like we could make this list under 600, not under 650. Everything's been in the fives so far.
Yeah, I guess the only state or the only territory that's above 600 is ACT.
Gotcha. All right. So as far as Townsville doing its dash, because it's had some pretty solid growth over the past few years, what's your thoughts there?
It is still catching up. The last 10-year growth wasn't up to long-term average yet.
Okay.
So there's still space for Townsville to grow. And at the same time, the sales market pressure, rental market pressure, they are still high and showing signs of increase. For example, inventory trend now is declining from, the current number is 1.1 months. Mm-hmm. And it's still trending downward. Days on market, 52 days. Not extremely low, but it's 12% lower than the same time last year.
Right. I'm surprised it's even 52 days. And okay, out of interest with this then, on the data side of things, because I know a lot of stuff is getting purchased off market in Townsville.
Right.
Is that then going to affect the days on market because it literally doesn't make it to market? So those ones that just happen like straight away.
That's a very good point. I think it does.
Yeah. Okay. Yeah. All right. So that's a good data point to check, but maybe something to just bear in mind.
Right.
Okay. All right. So why don't we talk about the rental market? We've already got a good yield of 5.8%. Mm-hmm. What are we talking as far as the pressure? Is that up, down?
It is stable. Tight market, 0.65% vacancy rate.
Okay.
And it's not increasing. It's just hovering around that level.
Not increasing, just hovering around there.
So good sign.
Yeah. Okay. All right. So as far as it's done its dash, you don't buy it. You reckon it's still got more fuel in the tank. It's still got more room to grow. And it's still very affordable. And realistically, it's got a great yield to it. Even if we are talking gross rental yield, I get that. There's some pretty higher expenses.
Right.
It's still got a pretty solid yield if that's the median yield. Mm-hmm. Okay. Anything else you want to talk about with Townsville?
Yeah, that's it. Simply a hotspot.
All right. And where is Townsville sitting on the leaderboard?
It might be easy to guess.
Yeah, I'm guessing 2.
Right.
Yeah. Okay. All right. So for the top 3, so we've basically got Bunbury, Townsville, Playford.
Right.
Got it. Okay. All right. Well, we've got our gold, silver medal podium winners already. It's time to have a look at what's on the rest of the pack. Mm-hmm. Why don't we jump into plain words next that we're going?
Queensland, New South Wales.
New South Wales.
Right.
Okay. And I'm assuming 650, we're not going to Sydney.
Not really.
No.
In Sydney, we may be looking at an apartment, a small apartment.
Very small apartment.
But I'm not buying an apartment, so I'll go regional.
Go regional. All right. And how regional are we talking?
Dubbo.
In
the Central West, I think.
Dubbo in the Central West. All right. Dubbo. And as far as the what's concerned, I've just done it in reverse, but what are we buying? Is it a house or is this one of the ones that's a little bit different?
Yeah, we've already moved to regional, so a house.
A house again. Okay, so a house in Dubbo. Now, for anyone that's not familiar with Dubbo, can you give us a bit of an overview?
So Dubbo, it's a town in the central west area of New South Wales. It has a population of around 56,000.
So decent size, yeah.
And it is the central town of a renewable energy zone called Central West Orana Renewable Energy Zone. So in these renewable energy zones, they are building a lot of wind farm, solar farm, battery and facilities.
Okay.
Then what else? Oh, Dubbo's local economy. It is really thriving. Job market really active. Do you know how much the unemployment rate is?
Judging on your reaction right now, I'm going to say like 1% or 2%, like really low.
Right. Hey, that's smart.
Yeah.
It is 1.7%.
Sorry, let me do that again. 5%?
No need.
Okay, so it's super low. And this is because of all the investment that's happening into the town.
Right.
Right. Okay. So unemployment rate almost non-existent. I'm going to go out on a limb and say that's probably one of the lowest in the country. I'm guessing.
I think so. Yeah, 1.7 can't be lower. Can't be much lower than that.
Yeah. Okay. And as far as the affordability side of things is concerned, what are we spending for a house in Dubbo?
Dubbo's median house price is just about 505,000.
505,000. Okay. And what are we getting for 505,000? This is like a nice kind of 3-bed, 1-bath, like close to the city centre kind of thing?
Yes. If we look at this price point, I guess at least 3-bedroom.
At least 3-bedroom.
And because Dubbo is such a small town, anywhere would be close to the city centre.
Gotcha. All right. Just tell me a little bit more about the growth side of things. What's Dubbo looking like as far as its 10-year median average?
Right. In the past 10 years, actually, the growth wasn't bad. It was 5.9%.
5.9.
Very much in line with our long-term average. In the past 3 years, it has achieved much better growth, 11.4% annualized growth over the past 3 years.
So it's grown 11.4% annualized over the past, would you say 3 years?
3 years.
Okay,
and most of it happened, I think, in late 2021 to 2022.
Right. Okay. And so this isn't the most of the growth that's happened then in the past 12 months?
Past 12 months, unfortunately, not much. Only 3% growth. Because after the crazy growth, 2 years ago, it went into this correction phase. And yes, that's why the 3% growth over the past year. However, we're seeing this recovery trend happening. And over the past 3 months, there's already 5.5% growth achieved.
So what do you think it is that's fueling this growth?
I believe just the usual two factors. One is the active job market attracting people moving to Dubbo, and the second is the affordability.
Okay. And rental yield and the rent pressure, what are we looking at?
Yield, not bad, 5.2%.
5.2, okay. So 5.2% for rental yield. And what are we looking at for the actual growth?
The actual rental growth last year, 6.7%.
So it's not crazy high?
Not crazy,
no?
Yeah, not crazy, but slightly higher than our long-term rental growth average.
Gotcha. All right, so buying a house in Dubbo for around $505,000, still well under our 650. It sounds like if Canberra wasn't here, this episode could have been in the fives episode. And we're expecting some reasonable growth here in Dubbo because it looks like it's got some really great economic factors to it. Amazingly low unemployment rate, a decent sized town, 56,000. So it's not like it's a one-horse town by any stretch.
Right.
And some pretty awesome yield here. Is there anything else you wanted to chat about with Dubbo before we move on?
Yes, I guess I would like to mention more about its market cycle position.
Yeah, open that up.
Right.
Good thinking.
Thank you. Yeah, we mentioned it's starting to recover, but I'm not so sure how fast the recovery is. It is moving upward.
Yep.
And based on its average last 10-year average, this next growth phase can't be as crazy as what Townsville or Bunbury did, because they were playing the real catch-up games. But I guess for Dubbo, it's just a healthy or moderate growth phase driven by affordability and the thriving economy. So I guess if we are looking at medium-term growth, it won't be too crazy.
So if you were to put your money on one of these to be like, this is going to be the one that's going to do the best in the next 12 months, because I know it's not all about 12-month growth, but just for this example, Dubbo wouldn't be at the top of that list.
I wouldn't think so, no. It is moving towards healthy growth, but I don't think the coming 12 months would be a fast growth period.
Gotcha. All right, well, final question on Dubbo. Where's it sitting on the list?
We've got the 3 hottest states, and comparing to the others, New South or Dubbo is still doing very well. So I would put it at the 4th place. 4th
place. Okay. All right. Well, time to travel. Where are we off to next?
Let's go to Canberra. Is
Canberra.
that right? Yeah.
Yeah, that sounds about right. Okay, so we're going inland a bit. The what is it? The flower state, or what do they know? The garden state?
I think that's called the garden state.
I may have just made that up. I'm not sure. I just know they've got a flower festival once a year. I'm potentially anyway, let's go to Canberra.
Cool. Let's go to Canberra. And in Canberra, with that budget, it's hard to get a house unless you are a renovation pro like Todd. Okay, so in Canberra, what I was looking at is a townhouse.
A townhouse, so it changes. Okay.
Yeah, I can't afford a house here.
All right, so a townhouse in Canberra. Is there anything more about the what that you want to open up, Jung?
Oh, thank you for asking. I actually have.
Yes, one I prepared earlier.
Yeah, not just a townhouse. I would like a townhouse built before 2010, perhaps even earlier.
Okay. So is that old to you? That's not an old house. That's relatively new.
Right. Then maybe I should say before 2000.
Okay.
Because I just don't want the building value to be too much in the total value.
Gotcha. I understand what you're saying. Yeah. So you want to actually be investing in the land.
Yeah.
Yeah. Okay.
3-bedroom plus, but I guess I checked Canberra's townhouses. Most of them are 3-bedroom plus, so that should be no problem. Land size, I would like some bigger lands, so at least 200. Better to be 300 or more. But the other thing is, I don't know, I don't dare to go for too big lands because they have land tax on investment property. Because if I get a large piece of land, my land tax will be so high and that will kill my cash flow.
Gotcha. Okay. So you're getting something that is a little bit older, not old, but just you're not paying for all of the new shiny. You're actually investing in the land. You want your land to be 200 to 300 square meters. If you can go a little bit bigger, great. But you're actually mindful of this because of the land tax component in Canberra. Got it. Okay. All right. And so we've got the what. What about the where?
The where, I picked the cheapest area in Canberra.
And where is that?
The SC3 of Tuggeranong.
Tuggeranong. How do I say that again?
Tuggeranong, is that right?
I don't know. I'm not. I'm definitely not from Canberra.
Hopefully I'm saying it right.
Please phonetically correct us in the comments if we've absolutely got that wrong. Apologies, Canberra. And so why Tuggeranong?
Because the house, it's relatively far from the city centre. It's at the south tip of Canberra. Okay. And the house prices here are cheaper than the other extremely high-priced areas. I was looking at unit prices here because in our data set, we only have houses and units. All the townhouses are categorized in units. So what I was doing was just to look at the upper quarter unit price. Okay. Upper quarter unit price here is 692K.
So we've gone over our 650 now.
Yes, but with my 650 budget, I'm pretty sure if I go older and not too picky, I can get something
for the 650. Yeah. Okay. All right. And so if we stick to that, we're we're going on the outskirts of Canberra, little bit of land, not too much of it, older dwelling. Why? If anyone's like, yes, Canberra is where I want to invest, and we've already got number 1, 2, 3, and 4 on our list. So unless Canberra's number 5, I've got a feeling it might be somewhere towards the back. So it's probably not a top pick for you.
You're all right.
But if someone's really set on it, why this setup? Why this setup for Canberra?
The primary reason is my budget. A secondary reason is the cash flow. House yield is quite moderate, just moderate in Canberra, 4%. But if I go townhouse, I can get somewhere around 4.8 or the high 4s.
4.8 to the high 4s. Okay, so you got a much better cash flow.
Yeah.
All right, so last question. Where are we sitting on the leaderboard for Canberra?
Canberra, as you said, it doesn't sound really good. To be honest, if I could choose not to buy in Canberra, I would have chosen not to.
Okay.
So yeah, Canberra, it sits at the bottom.
At the bottom. So it's number 8.
Yep.
All right. Okay. Boom. Bam, bam. All right. So number 8 on the list. Let's get in the plane. Where are we off to next, Jung? I think we're going to Tassie.
Yeah, that's right. Cross the channel.
This is why we're in a plane, not a car as well, isn't it?
Right, it's much easier.
Yeah. And whereabouts in Tassie? We're doing Hobart, Launceston? Where are we going?
Yeah, for Tasmania, I was looking at Launceston.
Launceston? Okay.
One reason is just because it's a bit cheaper than Hobart.
All right, what are we doing here? Townhouse again?
I was looking at a block of units, not a big block of units, but more like a duplex, a block of 2 units.
You're getting that for under 650.
Yeah, we can.
Amazing. Okay, so a duplex essentially. And so we're going to duplex. So the what, the where. Now, why? Why are we looking at a duplex in Launceston for under 650?
Right. To be honest, we can totally get a house in Launceston with that budget, but the rental yield wouldn't be good.
How bad are we talking?
The median rental yield in Launceston is now 4.5 or 4.6%. Not really bad.
But not really great either.
Not really great. And another thing is, because Launceston or Tasmania as a whole, it's not really grow in value in recent years. I would like to have a higher cash flow to make it up for myself.
Yeah, if you're going to hold that risk, you want that cash flow.
Yeah. So better choose something with higher yield. And based on my search on realestate.com, many of the duplexes are offering 6% or even higher yield. 6%
or even higher. So we're going duplex. So just so I'm getting my head around this as well, we're still doing much of a land play the same as a house, aren't we? Because you're not getting this duplex on like 300 square meters. You're getting the block, but it's just the dwelling's kind of split.
Right.
Yeah. Okay. All right. All over this. So tell me a little bit more about Launceston as far as its performance.
Cool. As I said before, it's not performing really well. Last 1 year growth was actually negative, minus 0.4%.
Minus 0.4%. Okay.
Based on the trend line, it is actually going back up. So in the past 3 months, it's 3.3% growth.
Okay.
So it's slowly recovering.
So 3.3%. And what about rental growth?
Rental growth, not really good, 2.1% in a year.
In a whole year?
Yeah. I think it's basically because Tasmania's sales price and rental prices have grown too much over the few years. I think from 2016 all the way to 2022 or 2023, they have grown too much and really hit the affordability ceiling.
Do you think much of this has got to do with all the interstate migration? Because I remember, and we've talked about this before on the show, when I was an agent, I'd sell a lot of houses for like 60-year-olds, 50-year-olds that are like, we're moving to Tassie, heaps cheaper lifestyle, all the rest of it. And I know that was quite common. Is it like that's not happening as much because it's not as cheap? Like, because Tassie boomed for like 5 years or something, didn't it?
Yeah.
Just kind of kept going. Is it just like it's as simple as it's done its dash and it's not as attractive anymore? So the push isn't there?
I'm pretty sure that's one of the reasons. The 5-year boom was, I guess, affected or driven by the high migration trend a lot.
Yep.
Yeah, you can see the internal migration and population growth started surging in 2015 or even 14. And then after 2 years of population booming, the property market started booming.
Right.
And now, I guess, one is affordability is already an issue there. And the other thing is, could be because of the government policies, could be because of the affordability issues. Internal migration now is not looking good. Population growth has slowed down a lot compared to past few years. That's the two reasons.
All right, so talk to me more about population growth then. If we're saying that a lot of that population growth that happened before, that was a big part of the boom and while it continued for so long, plus the value aspect of it. Tassie used to be like, wow, that's so cheap. Now it's not so much. Has all of the population, the migration really slowed then because of that as well?
Yes, population last year was only 0.4%, and that is lowest among all states.
Wow, okay.
Even lower than Northern Territory.
Wow, okay. All right, that says it in a nutshell there.
Yeah.
All right, so as far as the what and the where, you're getting a duplex, you're buying it in Launceston, you're getting a decent yield from this because otherwise you'd be, your houses was around 4%, but you're getting more up around that kind of 5+ yield if you're doing the duplex. Yep. So, and you're buying this for in the 500,000s?
Right. The median house price is 550.
It's 550.
So I think I have a good buffer.
Yeah, got a real good buffer there. Okay. All right. Before we go to the last state and jump in the plane to go to Melbourne, is there anything else you wanted to talk about with this one or anything else before we score it as well?
So no, I think that's basically it. Choosing it more for the cash flow than the short-term capital growth.
Okay. Where are we looking at on the list?
Because of the slow recovery and not so optimistic growth ahead, I would put it just above Northern Territory, the 6th place.
So 6th place. Okay, well, I feel like we all know where Melbourne's sitting now then.
Right.
But nonetheless, let's talk about it. Let's fly over to Melbourne and see what are you buying, where are you buying, and why are you buying it, 650 or less.
Cool. Let's go to Melbourne. And from Melbourne, we need to take another flight.
Oh, so we're not going to Melbourne. I did the same thing as Perth. I should say Victoria. Sorry. Where are we going to in Victoria? My mistake.
Okay, we're going directly to Bendigo.
Bendigo?
Yeah.
I just assumed under 650 you would have picked somewhere a little bit more metro, but we're still going regional.
I guess I'm feeling more comfortable when I have more options to choose from.
Okay.
If I go with Melbourne, my options would be very limited.
Yep.
Only in the actively developing areas. But if I go to Bendigo, I can easily get a house in a well-established suburb, nice neighborhood.
Got it. Okay. So as far as the where is concerned, we go to Bendigo. The what? We're getting a house?
We are getting a house.
Yeah. And so a house in Bendigo. Now let's start unpacking this why. Why Bendigo? There's a lot of regional places you could go to in Victoria. Why Bendigo?
At this time, I see a more notable recovery trend in Bendigo than in the other cities.
Okay, talk to me about this recovery trend.
Cool. It is actually just recovering. Don't expect really healthy growth because in the past 1 year, Bendigo's price didn't grow at all. It actually declined by 0.6%.
Okay.
And it touched the bottom. And in the past 3 months, didn't decline at all, but didn't grow at all. So 0%.
Okay. All right. So you're looking at this as like, whilst it might not be going up anytime soon, it's also not going down. Okay. That's a very optimistic way to look at it.
So I was thinking, let's talk about the data points first.
Okay.
Inventory now it's a 4.8 months of stock. I remember a year ago when I was looking at Bendigo's inventory, it was 5 or 6. So it has declined from that high level.
Okay.
That's the first good sign. Second sign is vendor discount. Vendor discount it's not really low, 6.6%, but it's declining and 10% lower than last year. So vendor discount going down.
Okay.
And days on market, another indicator for demand, very similar to the price. It's not declining yet. It's just stabilized. not going up anymore.
So what I'm really hearing so far is you're not seeing impressive numbers, but you're just seeing the trends going in the right direction.
Right. Seeing the trend, it's showing the market is going to recover.
Gotcha. Okay. And are you seeing the same thing for Ballarat? Because I know Ballarat and Bendigo often get talked about as they're being very similar, but they're quite different economically, aren't they?
Yes, but I think their market cycles are actually very similar to each other.
Okay.
But for Ballarat, the inventory is higher than Bendigo. Would be because the higher construction activity there.
Mm-hmm.
Yeah, Ballarat's inventory level is still 6+, not as good looking as Bendigo's.
Yeah, absolutely. All right, so you're getting a house in Bendigo, and what's a median price we can expect to pay?
555.
555.
Yeah, and because of the stagnancy over the past 12 months, it was slight decline in the past 12 months. The last 3 months, a median price is actually lower than that. It's 550,000.
550.
So we are just looking at 550.
Just below. All right, and what about yield and rental growth?
Yield is recovering. 2 or 1 year ago, yield would be only around 4%, but now it has become 4.5%.
Right. So this is going to start making it more and more attractive then, because then if these prices do end up staying a little bit more stagnant, or if they only end up going up slightly, if more investors are also leaving, then that yield could hit a 5% average pretty quickly.
Right. And last 1 year rental growth wasn't really high, 6%. But if we compare that with no growth in sales price, it's purely increasing your yield.
Yeah, gotcha. All right, and wrapping it up for Bendigo, what about the bigger picture as far as growth is concerned?
From a cycle position point of view, last 10-year growth in Bendigo, 73% in 10 years. It's very well in line with the long-term average. Okay.
All right, 73%. Now, is there anything else that you wanted to add to Bendigo before we pop it on the list, which, I mean, we all know where it's sitting. Unless someone's really bad at that math, then maybe they're still going to be surprised. Anything else you wanted to add to Bendigo?
I believe, we have covered almost everything about it. A recovering market. Yeah, I guess we have to be patient for fast growth. Yeah, if we want to buy in Bendigo now, we still have a good negotiation power. So yeah, that's it.
That is one of the big things that I personally like. I much prefer to buy in an emerging market that's going in the right direction rather than one that's absolute madness, because there's pros and cons to both. Like, because you're right, your short-term growth is going to be so much better in a market that's madness.
Yep.
But you can get some pretty good deals, like especially, what was it before in Darwin? 143 days on market. You get some pretty sweet negotiation power there. Whether Darwin's the place for you or not, that's a whole nother discussion. But this is the whole reason I wanted to make this episode with you, Jung, because it's not a one size fits all in property.
Right.
And for some people, like we were saying beforehand when it came to Canberra might be exactly where someone lives. They want to invest. They're not comfortable with borderless. So whilst you might be looking at it going, no, probably not for me. Personally, not for me. It is going to be for someone.
Right.
And this episode, it's the entire purpose of it. It's about breaking down then, well, if you are really set on one particular state, where's a place you could be looking into? And I think you've unpacked this perfectly. But as an overall, and by the way, Bendigo is 5th on the list as well. I don't think we officially said that. But as an overall, is there anything else that you wanted to add to this episode, Jung, or anything you want to wrap up into maybe a bit of an action step for everyone listening?
My takeaway from this would be, before buying an investment property, really work out your need or your portfolio need. If you would like a house in a healthy economy with good long-term growth perspective, or a hotspot with a fast growth in the short term, or a property with high rental yield, different people would have different need for their portfolio. First, work out that, and then trust the data. Do your research, and just don't limit yourself in 1 or 2 markets. Just go to SQM Research, realestate.com or domain, and see which market, which state or which city would suit your need. Yeah, I guess that's pretty much it.
And Jung's too kind to say it as well, but I think she's got a pretty amazing newsletter that she writes for InvestorKit that you guys can follow too if you want to follow along with some amazing research. So we'll link that in the show notes as well. But Junge Ma, we have officially arrived at the most important question of the entire show, which I need to start changing up because I've got a few regulars. And I think I already know what your favourite pizza is, but I'm going to ask you once more. Junge Ma, what is your favourite pizza?
So I'll change it a bit. I lately tried a pizza, and it could be my end of 2024 favorite.
Okay.
The name is called Sfiziosa.
Sfiziosa.
Sfiziosa. It's from a pizzeria called Boccone in the area I live, Portsmouth in Sydney.
Yeah, because your other half's Italian as well. Yeah.
I'm hoping so.
What do you mean I hope So it's like he's taking you somewhere pretty traditional by the sound of these names you're given.
Boccone.
Yeah.
They do make really nice traditional pizza.
Okay.
And this pizza, yes, Sfiziosa, it has prosciutto. I've said this before, right? Prosciutto is one of my favorites.
That's right.
It has prosciutto, but instead of rocket, they put slices of pear on the pizza.
Yeah.
I love it. I really love the combo.
So prosciutto and pear.
Yeah.
And what was it called again?
A white base. Sfiziosa.
Sfiziosa.
Mm-hmm.
And a white base. Oh no, you lost me there. I like a traditional red base, but okay. So Sfiziosa, and this is in Potts Point. So big shout out to, what was the name again? Boccone Pizza in Potts Point. If you guys are up for it, you might see Jung there ordering a pizza on the weekend. But Junge Ma from InvestorKit, you are always an absolute wealth of knowledge. We get amazing feedback from you coming on the show. Everyone loves watching a Junge Ma episode. So thank you, as always, for coming on and spending your time with me.
Oh, thank you, Todd. And thank you, everyone, for liking me.